Me too. David Burrows is here, President and Chief Investment Strategist at Barometer. We're talking today about North American large caps. As promised, we're off to Calgary now. Tony, hello.
Good morning. Thanks for taking my call.
Good morning.
I would like to ask David what he thinks about IMAX and would he buy it here? Thanks.
Sure.
27.40 today.
So, Tony, we look at things to begin with sort of from a top down to say, is this in a part of the market that people care about now? And certainly the media and content delivery space has been very, very strong this year. In general, because you've seen very good cash flow generation and some good growth. IMAX has had a great run over the last couple of years. It's done very well. It's recently pulled back. It's sitting right on technical support right now. So certainly, you can't ignore the fact the stock's pulled back recently and some of this weakness. You've seen some profit taking in a lot of the stronger names. I think that still it's fine, and I like the space. If I had to choose Cineplex versus IMAX, I'd probably go Cineplex.
Okay.
But I like them both, and we've owned them both.
So would the Cineplex over IMAX be tied to the concession stands and that alternative revenue source?
Certainly the concession stands, very, very strong. Also, great lineup of films coming down the pipe. They have a very dominant position from a market share standpoint. And they just have had tremendous cash flow generation, almost to the point where, it's hard for them to decide what to do with all that cash flow.
China's big, or IMAX's big expansion into China, not enough to sway you on that?
I think it's attractive. I think they're both attractive companies. Both big beneficiaries from the consumer. Certainly IMAX a little bit more global story.
Thank you, Tony, for joining us from Calgary. Let's go to Vancouver. Good morning to you, Jerry. Hello.
Good morning, Michael and David. Can you please give me your view on Magna International? Do you see much more upside on this stock, David? And what about its growth potential for the next couple of years?
Sure.
I've bought it in at the $50 level, and I was wondering if I should get rid of it or not right now.
Right.
Also, can you please, Michael, give me your street view in terms of what the targets are?
You bet.
Thank you.
Sure. So, Jerry, Magna has been a big beneficiary of the rebound in the auto stocks. Magna did a wonderful job, as it tends to do, going through the downturn. They made lots of good acquisitions, added capacity, and came out the other side very, very strong. The company is extremely well financed, very, very strong balance sheet. And one of the things that's held it back a little bit along the way, despite as good as the shares have been what's been going on in Europe. Europe is getting marginally better, and so that probably adds an additional tailwind to the shares. We own the stock. I've always been a big believer when you have something that's working, stay with it as long as it works. Very often things are getting better faster than you think. In general, we think that the economic backdrop is supportive. I don't think it's running away, but it's getting better. And Magna is not expensive relative to the peer group. So I think that this is an attractive hold. We also like others in the space.
Well, let's talk about that in a moment, but to Jerry's request for street consensus, $90.74 is the consensus target price, but the top-ranked analyst is over at BMO, and Peter Sklar has an outperform rating on it. He figures it'll be $95, $96 in a year. Is that a reasonable estimate?
I think it's very reasonable. We have a big tailwind. You got an aging auto fleet, and certainly, higher rates have held back buyers a little bit recently. But they're benefiting from the change in Europe as well.
All right. You said that you like others in the space. Let's find out if you like the one that Dave's asking about. He's in Guelph, Ontario. Hi, Dave.
Hi.
Welcome.
Okay. I was just wondering, Linamar, is usually considered number 2 producer, seems to be treated like the red-headed stepchild. I was just wondering if you could give me your opinions on it and what you think about the future. I know they've got their European exposure is in Germany, so they're not doing too badly. I was just wondering why it seems to be overlooked or talked down about. I'm wondering if that's also in your portfolio.
Right. So, Dave, Linamar is one of our holdings. As I say, we like the sector, and Linamar, I think, fits very, very well. They're good at executing. Yes, it is often considered to be, second behind Magna. I think they're quite different companies, but at the end of the day, we like them both. I'd be a buyer of the stock right here.
Sentiment is that there's more room to run for Linamar than there is for Magna.
Yeah, so Linamar has a history of building capacity and then taking time to fill it, and as they fill it, they become much more profitable. And so they're going through one of those cycles right now, and it looks as though the shares, do have some upside here.
Thanks, Dave, for the call from Guelph. We're just going to go down the street to Hamilton, Ontario for Louisa. Hi, Louisa.
Good afternoon, gentlemen. David, I have a question about whether you have a favorite pick in the pharmaceutical, medical device sector, whether you own it, but one that's maybe a little sexy.
Oh. All right, got something pink and
Sexy,
frilly?
sexy. Well, look, when we look at this, first of all, we like the pharma space in general. What I would say is that we have been slowly, over time, rotating exposure away from the straight sort of ethical drug companies, more to the biotech space, which I think is also interesting, has been one of the best performing sectors in the market this year. If you're looking for a company that is going to be more interesting than the ethical drug companies, but maybe a little less volatile than some of the single stock biotechs, Amgen is a good company to take a look at. All of the pharma stocks have broken out of, over the last couple of years, like 12 and 13 year sideways bases that make them very attractive. It's that the whole of the healthcare space is leading the market, whether it's managed care or devices or some of the imaging companies. If you're looking for something a little bit more aggressive, Biogen IDIC is very attractive, BIIB. Or frankly, you could go and buy the biotech ETF, XBI. And the attractive thing there is consolidation taking place in biotech. And the XBI gives you exposure across a lot of mid-sized biotech companies without having one company be a binary bet of yes or no. And so with the XBI ETF, you get a basket and you would be the beneficiary in the event you see additional buyouts in the space. So this is, we own Amgen, we also own XBI, we also own some Biogen IDIC. Sarepta
Therapeutics, 2.5%, Opco Health, 2.3%, NPS Pharmaceuticals, 2.8%. It looks like they don't have one single player that's a driving force within that.
It's a very broad basket in the XBI, which I think makes it attractive because consolidation is taking place. The big pharma companies have become distribution companies, and they're just adding content on their trucks, basically, to sell through the healthcare channel.
Now, as far as Louisa's request for a sexy stock, Amgen has a very saucy 1.7% dividend yield. Any chance that that skimpy little play is going to get a little?
I think you'll continue to see them return cash to shareholders. This is not a buyout target, I don't think, but it is, I think, very attractive as a play on the sector.
And it pays you 47 cents on a regular basis. Louisa, thank you for the call from Hamilton. We're taking a short break. Our guest is David Burrows. He is President and Chief Investment Strategist at Barometer Capital Management. We're taking your questions on North American large caps. We do have a line available now at 1-855-326-6266. When we come back after the break, we'll talk about the big banks south of the border.